Greetings, Jedi traders. David here of TradingFibs.com to bring you the technical momentum outlook for week 9, 2017. It is Sunday, February 26th. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. Support your knowledge of the market. See what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. Well, week 8. It was finally, that's right, let's scroll all the way up. It was a recap week of pullback at the top of our charts here. Let's go ahead and jump right into the daily gap as we see price action pushing those all-time highs, but no, it couldn't be. I can't remember the last price action to the short of more than 50 ticks, and it finally happened to us this week. However, as in any relentless trend, it was short-lived, and the market managed, as you can see here, managed to not only recover in the same day, but almost back up to the all-time highs to close out the week, totaling 10, count it, 10 out of the last 14 days of achieving new upper levels. So there it was, weekly opening 34.25 on the NQ, 642 and 53.50 here on the ES. Again, there was that pullback on Thursday, only to start recovering back upside, and why I'm really not moving down as much, but obviously regaining that Thursday move, and then price action back on Friday to the highs. If you've been following my analogy of the orange squeeze the last several weeks, it appears we have found some more pulp out of this market. Last week I alluded to and entertained the idea that the market may actually ease off a bit. Well, at least one day reprieve was good enough to satisfy that palate there on Thursday. However, it seems apparent at this point the orange has just more juice in it. I remain quite amazed at the plethora of articles, posts, tweets that continue to flood the market of hatred and despair. And how could this market continue to move up with internals not in sync and volumes simply not matching the history of such a move as the one we are having now? Better yet, the continuous running tally of how much the ES has not had more than a 1% pullback. It would be nice at this point if at least they could come up with the same tally number. So let's put this to rest and give you my 3 cents. Day in and day out, I reiterate to leave that bias at the door when trading and only watch the charts in front of you. This is best defined as no matter where you think the market should be, watching trend each day and being ready in both directions will keep you out of the emotion of the ongoing perma-bear influence and have you focused on making ticks. Whatever strategy you may have, it is recognizing the market will move where it wants and you have no control over it. I can throw you books to the read and posts by Stephen Burns. By the way, a shout out to Stephen Burns this week. As you can see here, wonderful, amazing at New Trader U. We'll come back to that, but there it is. Great tweets every day that simply reiterate what patience and discipline traders alike are instilled with. If you haven't learned it yet, it's not too late, but a good time to get with the game and realize that this market is simply not ready to correct itself. I, like some of you, would prefer the market to pull back and close out lower open gaps and return to the upper highs. But until that time, my sells are that much happier knowing what a trend looks like and seeking setups with trade management that allows one to ride a trend wave in both directions on every day. And when I'm talking about a trend, I'm talking about simply on an intraday that can be superimposed on a daily as well on a higher time frame that we'll look at today. But again, it's about the candles in relation to the cloud at 51.44. Throw in a VWAP and you got yourself a nice trending strategy. I'm not taking pictures at the end of the day and showing you what it could have been. I'm posting them as they happened in the trading day, both on Twitter and in our trading room. All right, so let's jump into some of those good looking pictures from the week, as I do each Friday, posting the week recap where you can capture each and individual day's trading session here on the trading session recap. Again, I mentioned all the all-time highs that we continue to push here. That's right, count them up. The last 14 days, 10 out of the last 14 days, reaching those all-time highs. Trading session recap this week, 3 out of the 4 trading days pushing those highs, as we just saw on the daily gap. All right, so weekly recap, some captured picks from the week here was on the 6E overnight session. Again, whether it's intraday or Globex, taking a look, price action, HA bars keeping you in the trend, 51.44 below the VWAP, giving you a nice move to the downside. Here, let's see, that was our Euro close. Let's go ahead and open up that picture. There we go, another nice picture on the NQ here. NQ downside, price action, as you can see here, moving in the direction of trend, 50 below the 144. The cloud and the trend bars all the way to the downside. Nice controlled move as price action migrated to the move to the downside. And our last picture here, let's go ahead and open that up. There we go. All three indices. It doesn't just have to be one. It could be all three indices. Nice enlarged image here, both on the ES, YM in the middle, and NQ on the left here. Price action, nice push upside, solid hike in Ashi bars. I believe this was one of the end of the day. Yep, end of the session trades there on Thursday or Friday. I believe this was Friday. Price action just relentless to the upside. All right, so where do we sit now and where might we be headed this week based on technical momentum? Where do we sit? Where were our levels both up and to the downside? All right, again, daily gaps. I continue to maintain and hold steadfast true that open gaps remain. We closed out the NQ here from last week's gap, but we do and still remain to have open gaps to the downside. So from an open gap perspective, as price action continues to push down, look for those as we close in on them, close them out. It also gives me the bigger picture that this market, while it is relentless and a nice pullback this week, we can still continue higher. We can pull back, but when we pull back to these levels, and we sure have enough to the downside. So in my mindset, we can continue to run up, and at some point, markets will recoil and come back down. Here you have the posted levels. I post these midweek as well. 32.50 nearest open gap on the NQ. 26.46 right upside above the weekly open, and right here 48.75 to the downside on the ES. All right, so let's jump into the current trends as we see them both on the daily and the 4-hour charts. Remember, each week or each morning I go ahead and I post not only the 60-minute and the 15-minute, but we go ahead and capture the range charts as well. From a bigger perspective, let's start with the NQ as the 10 exponential moving average just holding above it, sitting up here on the daily up here at 312.50 with an upside move to 53.90, both on the daily. 53.90 would be the overbought on the 4-hour. I've gone ahead this week and added in another 4-hour chart here on the bottom, a shorter time frame. As you can see, this for the most part representing about a month's worth of trading from one MML level to another. The Murray math levels, again, you could be using Fibonacci, moving average. Either way, trend is trend from the lows to the highs, with resistance up here holding at 53.51 and a half, which we talked about this week, holding to the line. Anything upside, we're looking to 53.90 at this point as our first major level of resistance. But before we get there, I love the 4-hour MML on a shorter time frame here. As price action, you can see here from one level oversold this week. In quotes, I say, as price action lifted back upside as we run up. So we'll look to the beginning of the week, 51, 52, back to retest all the way up to 61, which was the high of last week. On Wednesday, and price action, if we break these levels, we'll be looking up to 53.90. Obviously, if we break the 10 exponential moving average, we want to look back down to the 50 period moving average on a daily. That would come out to about 51.56. Here first on the 4-hour chart all the way down to 5,000. But before we get to any of those levels, we'll not only be looking to the shorter time frame of 53.12, but we'll also intraday look to the 60-minute and the 15-minute picture as well. All right, let's jump over to the ES, taking a look at the daily ES 4-hour charts. Price action here again holding up to the 10 EMA. That might be our first level support. You might be watching the 20 exponential moving average, which obviously would fall in between here, and 50 SMA to the downside, 2290, major support down here at 2250. Obviously relentless trend here on the ES as we continue to hold upside above both moving averages. ES upside, we'll be looking to 2375 as the 4-hour chart really holding at the upper highs here. And the 4-hour chart on a smaller time frame looked to 2367 to start out the week, up to 2373. And if we break those levels, obviously we might have a redraw on the MMLs, as well as if we break that 2373, I'll be watching 2375 up to 2406. Anything downside, we'll be looking to the 50 SMA, as well as 312.50 here on the 4-hour chart, and 2351 downside. Let me bring up a post there by Steve Burns that I saw posted here just today. Again, looking at the SPY, some 10 quick factoids of where the SPY sits right now. Again, some of those I concur with, 50-day SMA, 200 SMA, but really this market continues to really hold upside in the trend in a powerful bull market. Factoids, you could get that link off my Twitter feed at Trading Fibs on the SPY. So, big picture is strong bull run, holding up on the moving averages as well as the MML levels as well. Remember, you want to check out those pre-market 15-minute, 60-minute charts prior to each trading day. All right, let's jump over to the YM, daily YM. 4-hour charts, here we go. Price action again holding at the highs up here. 781 is the daily chart. We continue to not only hold above the 200 and the 50, but 200 should be way down below. There it is, 18,913, as we hold up above the 50. Strong bull run as well as above the 10 exponential moving average here. So looking upside first to 859 up here, a match on the daily and both the 4-hour charts. Anything to the downside, we'll be looking to 703, which would be our first level of resistance up here on the daily, and then down to 625 before we start moving down to numbers like 313 all the way down to 20K, which is be a huge run. But then again, you'd want to start matching up on the daily gaps to 599, 248 all the way down to pretty much 20,000, which eventually at some point the market will and eventually close those out. But as for now, not looking for that huge drop yet. Again, key levels on the daily here, 10 exponential moving average lining up around 625, which was a match on the 4-hour chart. 625 would be the support downside, which would be, again, a weekly target there. Stop here at 703 first before we migrate anywhere downside from there. All right, so there's our key major indices as we see them each day. Also want to make sure you want to check out those charts every morning session that I post there on the daily trend. Let's go ahead and show you what that looks like as they are on the trading pre-market trends here. Let's open up. There it is, daily outlook, posting the graphs where we have a price action on the 5144 on a range chart lining up with the 534 and the 5144, including the 60-minute and the 15-minute chart as well. All right, let's jump over a quick look into where crude is sitting now. 50 EMA as we hold above the 200 SMA as well. Resistance upside 56.25. Let me jump over to the daily gaps on the crude. Daily crude, there we are. Price action 55.41, gap upside 53.94, which was closed out on Friday. So we'll go ahead and close that gap out. Remaining downside 53.69. All right, so the crude right now holding upside above the 50-period moving average. Resistance upside here 54.69, downside 53.13. We've been holding above an 89 exponential moving average. Like to throw those on the key future markets here. Major support resistance here 53.91. So downside for the week, look to 53.13. If the 89 EMA can't hold, you'll want to also keep in mind the 50 SMA and the open gaps just shown to you. So there's our levels. Upside 54.69 all the way up to 56.25. Downside 53.13, which would line up with the support downside. But first watch that 89 EMA. If we lose support there, we'll look down to 51.56 on the crude, or at least the former lows down here around 52 and 3/4. All right, taking a look at the GC. Let's go to the daily, the 4-hour charts. As we can see on the daily here, price action again moving it back up to that 200 SMA. So watch that resistance at 1262.9, 1262.9. Let's get that other GC chart up here. We got the 4-hour, and there we go. 4-hour chart. Price action again founding that support on the 89 EMA at the beginning of the week. Off the level of the support. Nice move upside on the gold. Great trending week on the gold. Finds a little bit of resistance here at the major support. So 1265.6. 1265.6, just a notch above the 200 SMA. Is a nice upside target right now on the gold. Anything downside, again, big drop to the 50 SMA. So we'll look first to the levels downside, 1250 and then 1234. And then eventually down to 1218 if we lose that major support. Intraday, we'll look both to the 60-minute and the 15-minute chart. Nice trending move on the gold as we have been watching. Great moves on the gold this week. All right, wrapping up on our last two as we see the 6J here on the end. Price action again off the support, 87.50, 89 EMA broke through, found the support, lifted upside through the week to the upper MML levels after a little bit of major support here at 67.2. Again, we're sitting upside here at 89.06. So where do we go from here? Well, we'll have to watch the intraday as levels up to 89.64 at this point. First stop here would be 89.35.50. If the yen is to pull back this week, dropping down to 67.9, first stops along the way would be 28.10 and 87.50. Before that, we'd be looking at 67.20 all the way down to 28 with a pause here at the 89 EMA. And then to wrap things up here, the daily, the 4-hour on the end, price action again, major support resistance up here at $1.07. We got that 50 SMA first level to contend with. We found support down here, but the 89 EMA and resistance giving us a little bit of rejection up here. Price action came down on the euro, so you're going to want to watch that dollar, obviously. Major support resistance holding here. So to the downside, more likely trend right now, look down to $1.49. There it is, the match on both charts, both up and down. Anything upside, look to $1.07 upside. But before that, we need to break through $1.06 up here, up to $1.66. All right, Jedi traders. Hang on here. There we go. All right, Jedi traders, looking ahead to the week on the economic calendar. Again, Tuesday, big announcement from the Washington as the POTUS, Trump, will be addressing the nation. So watch the GDP, watch the international goods, look out for Red Star events. We got multiple Fed speakers throughout the week and jobless claims there on Friday. Again, week 9 appearing to be a bit heavier on the economic front than week 8 as we roll out the month. Tax reform announcements, March contract expiration is nearing, GDP, non-farm payrolls next week, multiple Fed speakers as you see on the calendar here. And the prospect, obviously, for a next rate hike are all upcoming economic events that remain on my radar alert. Technically, Jedi traders, we remain near the highs with serious open gaps below as we showed on the charts today. VIX levels remaining low, almost pointless of indicating when the market will turn. The daily charts on the indices clearly paint the picture as we hold above the prospective 50 and 200 period moving averages. The 4-hour MML charts, which support the bigger trend on a lower time frame, also remain at the highs and continue to remain in a very tight range. The Globex sessions, which have been a solid ground for trend setups with the London Open, but never indicative of where we are headed in the U.S. session. A great example from at least 2 days this past week, where Globex session was in one direction, we completely reversed it. As we continue to push at the highs and looking to the smaller time frames for every inch of how much more it can go, has been my most reliable indicator by use of the Heikin Ashi trend bars on both the range charts and 50, 60-minute MML levels intraday. This is a tough one to swallow, but until this market shows evidence of distribution, there is only one trend at this point. Technical momentum probability continues to remain at this point to lead us higher on the indices on the bigger pick, in my opinion. If all things remain constant and nothing occurs to shake things up downside, it still will not take much. I state with caution, as seen in the charts today on the technical momentum, as we are at a decision time as we have been week after week, based on my strategy that puts price action in a stall at these upper levels. I will be ready to alert all of you of the change or continue movement upside through social media and my daily outlook 15 minutes prior to the open. For those of you who are watching the ETFs or long-term holders, different rules may apply, as quarterly rebalancing is my preference for managing such markets. I would highly recommend you guys check out Jason Kelly at the Kelly Letter at jasonkelly.com. Check him out on his Twitter feed as well as his YouTube channel. Option to move trailing stops to key MML, Fibonacci, or moving average levels can lock in more profit if and when a pullback may occur, or even placing a 250 SMA on your daily long-term range charts can be one useful indicator before institutional support and taking in more profit. Again, another shout out on that 250 SMA by New Trader U. Here you can find him out at newtraderu.com, as well as his Twitter feed, Steve Burns at @SJosephBurns. All right, that concludes an insight into the technical momentum outlook for the week 9. Feel free to stop by at tradingfibs.com or any of my social media outlets to obtain more information. My trading mantra: one simple strategy, any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at Trading Fibs, and as always, I leave the crystal ball to the experts. I only watch what's in front of me and on my charts, and as always, leave your bias at the door when trading, and keeping in mind that there are a lot of variety of strategies out there when it comes to candles. I prefer the Heikin Ashi bars. Again, a lot of great resources out there for you to follow on what it means to remain in the trend. For those of you that are interested in joining us in our community of like-minded traders seeking those highest probability setups, feel free to email me, david@tradingfibs.com. You may join us on any Thursday or Friday to view the live charts as they happen in the trading day. Have yourselves a Blue Zone week wherever you may be. Good day, good night, and good trading to you.